Mortgage rates affect how much you can borrow, how much you pay each month, and whether a move makes sense at all. Small changes in pricing can mean hundreds of pounds a month over the life of a mortgage. Right now, some borrowers are seeing better options. Others aren't seeing any change. If you only follow the headlines, it's easy to miss who is actually benefiting, what has shifted behind the scenes, and what hasn't changed at all. In this video, we'll explain what's happening with mortgage rates, how that links to the base rate, and how to tell whether the recent changes are relevant to you. I'm Georgia from Property Bee. Let's jump into it. A lot of the confusion around mortgage rates comes from assuming they move in line with the base rate. They don't. The base rate is set by the Bank of England. Mortgage rates are set by lenders. Over the past year, the base rate has stayed relatively high, but it's only moved in small steps, with months where it doesn't change at all. So it's not moving week to week. It changes occasionally and then holds. Over the same period, average 2-year and 5-year fixed mortgage rates have generally eased, but they haven't followed the base rate in a simple, direct way. That tells us something important. Mortgage rates are influenced by the base rate, but they're shaped more directly by what lenders think will happen next. They look at expected inflation, funding costs, and how much competition exists between banks. That's why mortgage rates can edge down or change direction, even when the base rate itself hasn't moved for a while. What has changed recently isn't a sharp drop in borrowing costs, it's the range of options available. Over the past few months, the number of mortgage products on the market has increased from around 4,000 to well over 5,000. That's a meaningful change. More products usually mean lenders are competing more actively for business. At the same time, average fixed mortgage rates have edged down slightly from their recent highs. For example, average 5-year fixed rates have fallen by a few tenths of a percentage point from where they were earlier in the year. That doesn't sound dramatic, but over a full mortgage term, it can reduce monthly payments by a noticeable amount. However, these improvements are selective. They're mostly aimed at borrowers with stronger financial profiles. Rates haven't reset to earlier levels. They've adjusted within a fairly tight range. The people benefiting most from these changes are not buyers across the market as a whole. They are borrowers who already look attractive to lenders. That usually means deposits of 20% or more, stable employment and manageable debt levels. For these borrowers, lenders are more willing to compete on price. By contrast, buyers with smaller deposits often face higher rates and stricter affordability checks. That hasn't changed. Many lenders are still stress testing mortgages at rates several percentage points above the deal being offered. That limits how much people can borrow, even if headline rates move slightly. So while some borrowers are seeing improved offers, access to borrowing remains uneven. That gap explains why some people feel conditions are easing, while others don't feel any difference at all. It's just as important to be clear about what hasn't changed. Mortgage rates are still much higher than they were a few years ago. Even after recent adjustments, average fixed rates remain several percentage points above the levels people became used to during the previous decade. Affordability is still under pressure. House prices remain high relative to incomes in many areas. Living costs are still elevated, and lending rules haven't loosened in any meaningful way. This means that small rate changes don't automatically make buying easier. They help at the margins, but they don't transform the market. That context is often missing when rate movements are discussed. Before we finish up, it's worth being clear about scope. This video isn't financial advice, and I'm not a financial advisor. What I'm doing here is explaining what the data shows and how mortgage rates are behaving right now. Personal circumstances differ, and professional advice is always important when making financial decisions. So what should you take from all of this? Mortgage rates have adjusted slightly. Product choice has improved for some borrowers, but borrowing conditions haven't reset. The base rate is only one part of the picture. If you're watching mortgage news, it helps to focus on who pricing changes apply to, how lenders are positioning themselves, and whether monthly costs fit your own situation. That gives a clearer picture than any single announcement. Mortgage conditions are shifting, but they're doing so carefully. Some borrowers are seeing better options. Others aren't seeing much difference. Understanding that gap is key to making sense of what's happening right now. If you've found this useful, it's worth keeping an eye on the channel. We publish regular, calm updates on what's happening in the UK property market without the noise or the hype. If you want to follow along, consider subscribing. And if you've got a question or there's a part of the market you'd like us to look at next, feel free to leave a comment. I'm Georgia from Property Bee. Thanks for watching, and I'll see you next time.